Hey guys, welcome back to the Syndicate, the podcast where I try to get the world's best and brightest entrepreneurs, investors, VCs, angels, all the fun ones at least on the show. And today we've got an interesting one. I got Alex Norman. Alex runs the biggest tech ecosystem meetup group mashup event in Canada at this point, right?
Yeah, I would think so. Yeah.
Yeah, Tech Toronto. Thanks for coming today, Alex.
Thank you for having me.
You guys probably noticed the Toronto theme. I'm moving to Toronto, and there's a lot of cool players in the ecosystem, and Canada doesn't get highlighted enough. So I wanted to make sure that we do a good job. So, Alex, I've realized I'm a horrible interviewer when it comes to the introduction. So just tell me a little bit more about yourself. How did you get into startups? I see you've been doing quite nicely.
Um, so I think I've always been someone interested in tech as a whole, but I've never been a developer, so I've been around the business side of tech for most of my life. Went to McGill undergrad, and then after that, you know, did tech M&A. Went to New York, worked at Lehman Brothers, and this was the first dot-com boom. So you had companies like eBay going public, companies like AOL acquiring companies, and I did worked on M&A transactions, and I saw what was going on, and it reminds me a lot of today because I believed a lot in technology and not a lot of the valuations at that time. So I did my sort of 2 year M&A analyst stint, and then went to work for startups, one in New York, then one in the Valley, and then one in London. Um, had a great experience of being more senior in different companies. Some succeeded, one succeeded, and two failed. Uh, Went back, got my MBA, had to pay off for it, so sold my soul for consulting for several years, and realized I really missed being involved in helping build companies. So moved back to Toronto and started an e-commerce business, which I eventually sold. And since then, I've been helping build the ecosystem. So very active at looking at early stage companies and trying to add some business sense to them. So I guess make a long story short, I've been involved with tech since I've been a kid, and I didn't really get involved. It took me about 10 to 15 years to realize this is where I wanted to be. I wanted to be at helping tech companies change the world, help them build up and build rapidly.
So home save, you start a business. I
Yeah,
imagine it's a nightmare. It's up and down. It looks like you had an exit, so congrats.
thanks. Uh, yeah, high highs and low lows. And sometimes the highs cause the lows. So I don't know if you're familiar with Dragons Den.
Oh
Yeah,
yeah.
it's a Canadian version of Shark Tank, and early on we were featured on Dragon's Den as a startup with minimal funding. What else could you ask for about a 5-10 minute infomercial on primetime TV? And that should have been the highest of highs, but got hit by so much traffic, and that we were preparing for it, and the site slowed down to molasses. So we had to pull the site down and just capture email. So building a company, you can have the highs and lows at the same time.
What's it like selling the business?
Hard. Um, so you build a business because you have a vision, and when you have a bit of traction, you start seeing it to be a viable business. And I think you associate yourself, or at least I associated myself so much with HomeSav. This was what I was doing 90 hours a week. I had 25 employees. We had investors. We had many stakeholders, and you want to take care of them all. And we got an acquisition offer that made the most sense for the way going forward. And you try to shepherd and make sure that what's going to happen post acquisition is what you want to happen. So we chose a company to sell ourselves to that would let us continue along our path. But the reality is, no matter how you prepare, once you're part of a bigger company, uh, you have limited control of what the future holds. So it's like, imagine I'm not old enough to have kids that gone to university, but I imagine it's the same thing. When you sell your business, you're losing a lot of control over something you've helped grow and become a living entity, and it reflects what the values that you want to bring to the world.
So you sell the business. What do you do next? It looks like you got into a little bit of angel investing.
So I got to angel investing, ecosystem building, and none of this was intentional. So I sold a business. I was actually with the choir, and if, and I thought the next thing I do is start another company. And I was, you're at the choir, and no matter how intense you work, it's not the same thing. You have extra hours. And one of my friends had moved back from Seattle and wanted to get involved with the community. And I said, okay, I've had the luxury of living in New York, San Francisco, and London, and being part of those tech communities. I felt I could bring a bit of that to Toronto. So I started TechToronto with him, with the idea that we could help build a bit more cohesive, of a bit more intertwined community and give back to the community. At the same time, I started lean methodology and new ideas, and I was giving advice to startups. And what happened was TechToronto started growing organically. The ideas I was testing out weren't valid, so I killed them. And the advice I was giving was taking more and more time for me. So started concentrating on building TechTO and giving back more to the community. And I went from giving advice to startups to figuring out if I'm going to spend time advising a company, I want to write a check into there. So if I'm going to open my Rolodex, if I'm going to make myself available, the best way to do is focus on companies I feel confident enough to give money, because money is one thing, but my time and my Rolodex were more valuable. And I felt that was the best way to actually concentrate my effort.
So you sold the business. I imagine that's where the cash for angel investing came. How many zeros did this exit have? Can you say?
Not enough. It was I'd say it's a double or triple. I think my angel checks aren't the biggest ones in the city. And
Canadian double or US double?
Canadian double. And it was cash, some cash and some equity, and the equity is still not liquid. So hopefully there's more. I also, one of the companies I worked for previously has also had an exit since. So a company called Simply Business, which I was at in the early 2000s. Since I sold mine, sold for $490 million to Travelers. So that some cash came from there too. I had a sliver of equity, but yeah. And I also live a pretty frugal life too.
Yeah, and Toronto's not that expensive compared to the other comparable startup hubs. The only one I would say that would be comparable and also comparable price-wise would be like a Berlin.
We're probably more expensive than Berlin. We're more expensive than you probably think we are, but yeah, compared to New York or San Francisco, we're cheap.
Yeah. So interesting. You're working on building the Toronto ecosystem. When did you start TechToronto?
Mid 2014.
Mid 2014. Take me back. What's it look like in terms of the scene?
I think the scene had started maturing a lot. But what I think the key things were, was a very fragmented ecosystem where you had a bunch of talent, but a bunch of people that talk to each other. I think if you go to the Valley, you go to New York, you go to London, there's the PayPal mafia and different, like the ex-Google mafia, but everyone talks to everyone. And I think it provides lots of learning. And I think where Toronto at that time was, it was just emerging. It had a history of we've had been a tech ecosystem since the 80s, and we've had some successful exits every decade. But I think what was changing then was fragmented community, and a lot of small exits where you were having teams and founders that had had doubles like me, and were starting to reinvest in the community. So I think the timing was just right. Community was ready to start taking off and start being more ambitious.
Is Toronto still exporting? I know a lot of talent starts in Canada and then goes other places. Would you say it's inflow? Is Canada importing or exporting talent at this point?
Probably both. The lure of working in New York, or more particular the Valley, for young talent is still there. And I think programs like YC will attract teams, of which some subset will stay there. But what you're starting to see is experienced founders that have sold the business, had to move to the Valley, start coming back. So you're having a lot of Torontonians, like I left for 14 years, are moving back for lifestyle and the ability to build a big business here. And now we're starting to see a lot of other people move to the city. I think it's an underappreciated tech ecosystem. You're starting to hear about it. And the reaction I get from lots of people who moved here, because I saw this one great company and I didn't realize how big the ecosystem was and how vibrant it is. And I think we're starting to build a lot of momentum, where we're probably still losing young talents from like University of Waterloo and University of Toronto, but we're starting to import lots of more experienced talent. And as you see our company scale, we're going to have to import experienced people here, because we haven't had the people that have run the billion-dollar companies before. And sometimes you need that CMO or CTO that's seen it before. So on the net, we're probably importing more than we're exporting now.
How do you build that brand for a city? Everyone wants to be the next Silicon Valley, but at the same time, it's not easy to do. It's a confluence of things. It's talent, it's money, it's all of these things. But I know Canada and Toronto specifically have done a pretty good job of promoting this. What if you say that they've done well that others can steal from?
Well, first, I think we're concentrated on not being Silicon Valley. We're concentrated being Toronto. And I think the second thing is you've had some small successes and now you're getting bigger success. So the easiest way to become a brand is to have lots of successful companies. We haven't had many unicorns, but we've had lots of companies with exits, and we've had lots of founders that have sold to the Googles and the Apples of the world coming back here. So I think you're having people move, when people in the Valley or New York or other locations see people choosing to start a business in Toronto that says something, when you start having companies raising 40 million rounds like Wattpad or Ritual or Hubba, people start noticing that there's a few companies raising bigger rounds in the city. So I think success begets that. And I think the other thing is we're very lucky right now. We're starting to come together as a community, and we have a mayor and a city that really appreciates what they're going here. And we'll spend the last 2 years working with different stakeholders to figure out what is the Toronto story and consistently say it. And I think if you look at all the successful ecosystems, you go any one of those ecosystems, people tell you consistent branding message. You go to Israel, it's, hey, we're startup nation. And I'm sure you go to VC, startups all say the same thing. You go to the Valley's like, hey, if you don't work here and you don't work with a Valley company, you're silly. Like that's the unsafe thing. I think Seattle, it says, hey, we have $1 billion exit every year. So Toronto's now got the success, but more importantly, it's now getting a common message about what we are and who we are. And also we have a bit of luck right now. We have Jeffrey Hinton and AI. It's the big thing. And so that's put us on the map because we have lots of AI talent. And I think the other thing is on the blockchain, you had Ethereum basically be born out of here. So I think not only have you got some winning companies, some successful companies, but you've also got a community that's pulling together and branding itself in the same way. And then you've got the effect of timing where AI and blockchains had major breakthroughs here, and that you can't plan that. That's a bit of fortuitous timing.
Talk to me a little bit more about blockchain. What are your thoughts and thoughts on the ground? I've heard differing opinions from different Canadian investors and from other Canadians, etc. I have my own views, but I'm curious to hear your thoughts.
The whole situation reminds me of the late 90s. So if I go back to the late 90s and what I thought about the internet, I thought, okay, this is a new distribution channel, it's a new marketing channel, and a lot of what's being pushed right now makes no sense. I think blockchain is a technology that has super value because, distributed trust is what you're talking about, and faster ability to do transactions without having a middleman. There's a lot of value in that. But I think where the technology is today still hasn't found its initial adoption use case beyond maybe Bitcoin or Ethereum. And so I look at the technology, I'm fascinated about it. I think it's still too hard for mass adoption to use it. If you want to buy so let's say even you want to do cryptocurrency transactions, buying anything other than the top 6 cryptocurrencies is still a pain in the ass for the average person. Mm-hmm. So my view is this is a vital technology. As an investment, it's hard. It's extremely expensive to invest in blockchain companies, and I think there's going to be a lot of projects that are being worked on right now will go away, but that's how creative destruction works. Start 1,000 different ideas and figure out what were the right use cases. So I'm very bullish in the long run, and in the medium run, I think we're going to go. Next few years will be a valley of despair.
Absolutely. It's super overhyped currently, and I think it's a little underhyped long term. We'll see. The two things that you basically brought up, distributed trust and payments, that's more or less governance and money, which are more or less the only two values of government besides holding a gun to your head. But that's a whole
don't have much of that in Canada.
What?
We don't have much of the guns to the head in Canada. We're a bit more pacifist.
You can import those from the US if you want. I hear we'll sell them to just about anyone. So speaking of our friends to the south, my home country, we were talking about this a little before, but yeah, Trump is being really friendly on immigration, which is apparently super helpful for Canada. Talk a little bit about how, I was moving to the US with my wife, and then the US said no. So now we're headed to Toronto. So talk a little bit more about that dynamic and how it's playing out for you guys.
So right now it's very beneficial. I think it's not only Trump, it's also Trudeau. We have a prime minister and a government that's very good at marketing our country and sharing the values that the world wants to hear and keeping our doors open. While you have in the south of the border, you have a country right now in a government that's not being friendly to large sections of immigrants. and also is looking a bit unstable. So what we're seeing here is not only people from the countries that the government's being less friendly to, but also people that are immigrants that are moving to make their life better. And right now, I think no one will say Canada is the economic dynamo that the States has historically been, but we present a safer version of that for people that are going to make the move. Making that move is so risky and so much of a challenge. We're seeing an influx of talent coming here, because they realize that there's enough of an economic benefit from being here without the current instability and risks in the States from political and immigration perspective. So we're seeing a lot of people, I think, that would not consider Toronto before Vancouver before coming here. Now, that's the short run. Right now, as at least this week, we're hearing about potential tariffs on steel and aluminum and NAFTA. Depending on where trade goes, it could be a net negative for Canada, right? If it's one thing, steel and aluminum may hurt our dollar, but what I'm more worried is if NAFTA falls apart, the ability for services to be delivered across that border gets severely limited, or the rules around financial investments change. That could have a negative effect on this community, especially because historically, if you go back 15 years ago, there was rules about withholding taxes on investments here, so it was not a friendly place for US VCs to invest or foreign capital invest in startups, and that's gone away over the last 10, 15 years. So lots of we have now good ecosystem for early stage funding, but for later stage funding, a Sequoia client can come write a $40 million check and they're looking globally. If we change our rules because of NAFTA, see that in capital have changed. So right now it's beneficial, and I hope it continues to be beneficial. But with the current environment, there's always an overhang of rules changing overnight.
Yes, there is, and no one wins a trade war. But
no.
Maybe you can figure out a way to hook up a little narrow middleman to make those investments from the VCs, so no one knows where the money's coming from. So
maybe
solve some of the problems. So you built TechToronto. How large are you guys today?
So we're in Toronto, Waterloo, and Vancouver. Last year we did about 40 events, and we had about 18,000 attendees, and about 300 founders speak. So I think that shows you scale of what we do. We're in Toronto, Vancouver, Waterloo. I think our hub really is right now Toronto because that's where the team's based. We have 25,000 members, so I think that's what we do from an outside perspective, and that's the influence we have. I think we also play a bit of advocacy role here, where we try to help work with when the city was looking at branding, how to brand the ecosystem. We partook in that. So I think we have numbers, but we also were trying to. I think what we're trying to be is help build a more collaborative ecosystem. So we have many partners and other organizations we work with that give us much more reach.
Speaking of which, all investors want that reach. They want deal flow. What's the best way to build a network like this? Something organic that's events driven. What were the big challenges and what were the big aha moments?
I think the biggest challenge is this is not a business that makes sense to do. It's heavy logistics. There's not much margin, and you have to be really doing it. And I think what's worked for us is we always put the community first. We always try to say, I think just when you're running any business, you have to give more value than you're obtaining from your customers. And I hate to use the word of customers, but I think what we look at is our job is to provide value for the ecosystem and listen and provide stuff that's net new, is best in class, and puts the community first. And I think any ahas when it reinforces that, when we hear, sometimes we don't know why stuff are working. We hear back from founders, say, I presented your event and I had 30 calls from corporate Canada next month to do demos, or I found my co-founder at your event. And so I think the aha is the stuff that we don't even realize we're helping the ecosystem with. And as long as we're being value add and providing some of that glue to the ecosystem, I think we'll have this reach.
And the reach is super
satisfactory answer. But
No, I think it's a good answer. It's one of those ones where it kind of just takes a lot of effort.
yeah, and the other thing is because we're community first, we have this is an organization. We have a couple of full-time people, but we have tons of volunteers and tons of people that have helped us make it happen. Every founder that spent time with us, the founders aren't coming to talk at our events to promote themselves or promote their company. They're coming to share lessons. And I think really by trying to take care of it, trying to put the community first, we've had a lot of people help us be successful.
And you've used that, it seems pretty successfully as an angel. Talk to me a little about what you look for investments.
So I'm usually really early, so pre-seed or seed. I look at there's not one template I have, and I don't score investors. I think I score opportunities. I look for, I think it's a mix of the team, a mix of my ability to at least comprehend what they're doing. So I think the key commonalities I look as I matured as an angel investor is I look at the team, I try to understand what insight they have in the market, and I try to understand what they're going to do over the next 12 to 24 months to earn the right to survive. Right? It might not be what they need to. It might not be what they end up doing, but because I've come to realize that what I'm here is to provide some capital, maybe some time and advice that helps people get to the next round. Because most of these companies will not be cash flow after the next 24 months. So need a team that's kick ass, understands where shortfalls are and how to address it. Need a team that has an insight into the market, or at least a perspective in the market they can execute against. And also someone that understands that if you look at all the risks the business has today, which it will have many, is which ones they think they can use the next 18 months to remove from the business, which will earn them the right to raise money from institutional investors.
And with your background, I imagine a lot of this is networking, connections, and intros. What, in your experience, is the best way to do an awesome intro? So specifically to either an investor or to a potential client.
So it's always to do double opt-in. I usually find if someone, so it's two things. If someone's asking me for an intro, I ask them to write a really concise email I can forward, and then make sure the other party's interested, so I don't waste both parties' times. If it's someone I volunteer as an intro, I will then just reconfirm and explain to them why that intro is valuable to the person I'm going to make the intro. So I think the key thing is anyone that wants an intro, the person that's going to be receiving intro is usually very, very busy and has many potential introductions. So it's being very clear why they should talk to the person and making sure they have the time and interest before you make that intro.
Very good. We hate it when we get all of those. Hey, you should talk to so and so. The double opt-in is incredibly important. I always like to do that. Do you have any specific thesis that you look for your investments? Are you looking at a specific industry?
I not explicitly. There's some industries I'll avoid just because I don't understand them enough. Like any like medical devices where I don't understand FDA process. Clean tech I usually don't touch. There's some, so not thesis driven per se. I do, and I also have different bars for different industries. Like I think anything in AI or blockchain have a much higher bar, just because I think they're areas that everyone's looking at right now. And I think when it comes at the earliest stages, you pick again because you're not picking full form teams. And if I look at AI or blockchain, I think there's gonna be a lot of money thrown at lots of great teams that have to execute perfectly at the next round. So if anything, the harder areas I tend to be more picky because I just think there's much more capital, much more competition going towards it.
It's probably a smart bet. I want to jump to the lightning round. How's that sound?
Okay, great.
These are some rapid fire questions. First deal you did.
I think it was Shoelace, ad tech company. They basically are automated retargeting for small businesses. So love the three founders. I love them. What they're doing is literally you have a Shopify store, for example, and they basically one click button. They basically use chat interface to be almost like a outsourced CMO for small companies. Yeah, and they're actually month over month growth since I've invested. It's pretty impressive.
Nice, good work. What are you excited about today? Industries, topics, etc.
Surprisingly, I'm actually excited. Not thematic, but I'm excited about businesses serving small businesses. That's a personal bias because I've been I've been involved in one before, but I think when I look at the future of where work is going, everyone talks about the gig economy, and I think it's actually what you're. I think, and everyone talks about there's been negative trend in startup businesses starting up in the States and maybe Canada, but what I'm seeing is I believe the future is a lot more small, nimble businesses, and I think right now companies are just figuring out how to serve and provide value add software or enable those small businesses to succeed and with great unit economics. And if I look at my portfolio, there's quite a few companies serving small businesses. And I don't think you could have done that 5 or 6 years ago. And I think that's really where business is going, is a lot of people doing loose aligned, maybe remote teams that will basically outsource big chunks of business to third parties. So and I think there's a lot of activity in that space in Toronto, from anywhere from, like, if you look at FreshBooks and Wave Accounting, or just trying to think who else, but there's Square, but like there's a lot, Shopify, again, Shopify is enabling small businesses, and I think it's an area that traditionally is overlooked, and I think it's an interesting place right now.
It is. They're always hard because to target and to look at the needs and wants of small businesses, they're not really all the same, but at the same time, it's still a huge industry.
Well, and I guess, and sorry, I'll just pick on that one. But I think the historical problem was they're not consumers, so they don't have the mass market approach, and they're not enterprise. So it's always been a unit economics problem. And I think now, with where the internet and where technology is at, you can get something that can scale with the right unit economics targeting small business, which you couldn't do 5 or 10 years ago.
Okay, fair point. What two biggest wins to date?
I think it's too early in the journey to say anyone's a big win or not, because I've been doing this for about 2 years. So ones are building themselves up. I look at the company called Logo Joy. And what I'll say about them is they started, their first product is basically using AI to create a logo for, again, targeting small businesses. You can get your logo in like 5 minutes, and they've had astronomical growth over the last 18 months. I think they positioned themselves. They're now right now in talks to raise a large round, and I think it's a perfect company where people look at the initial market and initial product. They say this is not going to be a big opportunity, but I think this is a team that understands what they're doing and they're executing it, and it's going to be much bigger than people think. And then the other one is a company called Snap EDA, Toronto-based company, gone to YC. And the founder, has built a very lean team where she's got product market fit and is about to put fuel in the fire. So she serves basically, how do I explain it? She has a database of chip designs, and so people that are designing electronics need to find. There's no standard place to find it. She has the library for this has something like 25,000 engineers coming every month to look up part designs and figure out how to build future hardware. So she's got a model which she's built, and all the stakeholders there now that I think she is about to have an inflection point where she scales super fast.
Especially as the DIY movement takes off. What about big swings and misses anti-portfolio?
Well, the anti-portfolio is probably Element.ai.
Ooh, that hurts.
I wasn't, someone else asked me to invest with them in the seed round, and it, I didn't see how to differentiate themselves. Like, I'm an ex-consultant. It sounded like so Palantir uses big data for consulting. Element AI feels like using AI for consulting, and I said, this feels like a service business. Right now, that's a huge IRR I missed, at least on paper, and I think they're doing wonderful things, and that's probably the biggest swing and miss right now.
If you could have coffee with any one person, who would it be?
Great question. The young Jeff Bezos, not the current one. I like it, like in the late 90s. I want to know. I would love to see, again, as an angel investor, I'd love to see what his personality and how he thought then. Because right now, everyone, when they talk about the past, has a glorified version of what they remember. I do, everyone else does. I'd like to see what he was like then and see if I could learn anything about other founders, what would I should be looking at other founders.
Remove a little bit of the God complex.
Yeah.
What podcasts, blogs, etc. do you look to daily, weekly basis to stay informed?
There's a mix. Some are just more entertainment, like Planet Money. I think it's really well produced. Just general what's going on in economics. 20-minute VC. I think it's very interesting because I like to learn how other VCs or how VCs are thinking. I think I never pronounced right. Stratechery. Yeah, I think I don't know. It's one of the best, most insightful, thought out pieces on a weekly basis. Trying to think what else. There's probably a bunch of others that I just don't realize I'm reading without. Yeah, I have a bunch of what I use Nuzzle and a bunch of other places to pull interesting articles, and I'm constantly reading because just doing what we do, you have to be constantly curious.
Nuzzle, I've heard about that a lot. I haven't checked it out. I need to enter that in and look at it right now. And one last question. Outside of ICOs, what is overhyped?
AI. I think AI reminds me of mobile. In 2008, you could raise a lot of money by saying you're mobile first. By 2000, if you didn't have mobile as part of your strategy, you weren't a real company. And I think AI is in the same place right now where people get premiums because they're AI. And I think AI is being used a lot to justify existence of companies. But if it's not, I think in a few years it'll be part of your overall strategy. And if you don't have, and you're not, lots of companies don't have when you push behind what the AI is, they don't, to me, have a sustainable AI advantage. And I think it's quite overhyped right now.
I would definitely agree. They're basically just throwing basic processing algorithms on large data. Now, some of the stuff is very interesting, specifically what you guys are doing in Toronto. Definitely want to check that out a little bit more.
There's definitely interesting stuff happening, but I think it's an overused term right now.
So, if there's one thing that I didn't ask you about, what would you have liked to talk about?
Why everyone should move to Toronto. I think I'll talk about. I'll sell Toronto a bit for 2 minutes.
Do it.
Toronto, actually not only is more affordable, but has a much higher quality of life. Like, you can actually live downtown and have a garden, and have a good house a good neighborhood to raise kids. And you also have a tech ecosystem that has ambition and will match the rest of the world. And I think it's just a really good ecosystem to be at right now, because I think the trends are back, and you're going to see a bunch of companies succeed, but also you're starting to see a bunch of teams, serial entrepreneurs that have the knowledge and know how to build companies. And so I think it's a really good place to be right now. I don't know if I did a good enough job selling it, but there's a lot of big companies here don't advertise it. The biggest disadvantage, like anyone from Wattpad to FreshBooks to Wealthsimple,
Shopify.
Shopify. Well, Shopify is Ottawa, but has a big Toronto presence. But there's a lot of large companies here that Americans just assume are American. So I would at least, maybe don't want to move here, but I think if you're in the tech community, it's worth coming and checking out and seeing what's going on, because I think we're going to produce a lot more large companies over the next 5 to 10 years than people expect.
And they have an incredible startup visa program. If you're an entrepreneur, you just got to find an angel, a VC, or an accelerator that you can get some money from, and you can move there essentially regardless of wherever you're from. There, to my knowledge, they aren't building a wall at this point. It's a solid place to be, although it's a little cold at some points. But
you might want to be in South January and February, but and the startup visa is a great way to get here.
Yeah, Alex, thanks for coming on. Where's the best place for people to reach out and say hey?
I guess I'll be bold and give you my email, alex@techtoronto.org. If you want to know what we're doing, just check out techtoronto.org.
Alex is a hustler. He's connected to the entire ecosystem. If you need to meet someone and you can explain to him and make it worth his while, Alex will be your man. Thanks for coming on today, Alex.
Thanks, Matt.
And guys, thanks for tuning in. Hopefully this has been helpful. Whether or not it has, you should leave a review on iTunes. Even if it's a terrible review, it helps us rank higher. But seriously, there's some big podcasts that we have to outrank, and we otherwise can't get the incredible guests on. So the syndicate.vc/iTunes. You know the drill. If you haven't done it yet, you probably aren't doing a great job with life. Until next time, cheers, guys. And cheers, Alex.
Cheers.
Awesome.